Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. How is everyone doing? If somebody could put a comment in. Not seeing anything yet, and I see. All right, there we go. Just making sure the comments are working. Good afternoon, Patrick. Again, I know there's some people watching it. I can see it going on, but not a lot of comments yet. So, hope you are having a wonderful Sunday. If you haven't noticed, hey, Connor, happy Sunday. I put up the sector overview and this week's Jim Iorio podcast went up early, a day early. So it went up. So there's lots to watch and to take in between today and tomorrow. Good evening, Anissa. Hey, Ted, thank you for being here. So, not going to make this longer than it needs to be. We had a good session Friday afternoon covering those head and shoulder patterns. Also touched on them briefly in the sector overview. Let's just do some quick prep for this week, and then we will get back at it again tomorrow morning. So, let's see. Mike, are you making the course? Yes, I am, Connor. Hey, happy Sunday. If you have time, please provide levels for the Q head and shoulders patterns. We will take a look at the Q levels. Thanks for the sector overview. Prepped early this morning because couldn't sleep in. Well, hey, you got your prep out of the way then. All right, let's get to this. By the way, if you are new, if you are new here, just consider subscribing and hit that like button. Everybody else knows what to do. All right. Tomorrow, Dallas Fed Manufacturing Index minor. We're going to make sure see if it's still in major contraction. And then we have, I don't know what else can the Fed's people talk about. We just got out of Jackson Hole. We got more Fed speaks. They must just like to hear. We don't need Fed speaks every day. So that's Monday. Tuesday, 7 a.m. Central. More Fed speak. We got the house price index with the market shrugging all off that. Consumer confidence will be interesting. So check that out at 30 minutes after you open on Tuesday. Then we have the JOLTS job openings, which is minor, but interesting to see with what's going on with employment. Then we have Dallas Fed services to see if that's still in contraction. Then we got more Fed speak. Oh. On Wednesday, we have the mortgage stuff in the early. Then we have, before the market opens, more Fed speak. Then we have the ADP employment numbers, minor, but we'll take a look at them. Then we get Chicago PMI 15 minutes after to see if that's dropping closer to contraction. Then, of course, we have our crude numbers. Then more Fed speak. On Thursday, we got continuing jobless claims and initial jobless claims. So we're still keeping an eye on there for that 1456 number, but they were better last week. Then we have ISM manufacturing. That is pretty important. 30 minutes after it opens, 15 minutes after it opens, we have global manufacturing. These are the small firms. These are the large firms. They are still in expansion, so we'll see if they stay that way. All right, then we'll take a look at ISM manufacturing prices to see if they are coming in at all. Then look at this. We got more Fed speak. And finally, remember, Friday, going into Labor Day long weekend. So if you're not in the U.S., not tomorrow, but the following Monday is a holiday here. So there will be reduced futures hours and the stock market will be closed. So right before that, going into the long weekend, and especially some people will take off Friday to make it into a 4-day weekend, or at least a short day on Friday. But before the market opens, we got non-farm payroll Friday. So to see if the unemployment's going to tick up or not. So we're not really starting with some major unemployment news yet, but it's always important, especially because the Fed is expecting that to tick higher, to see if it actually starts ticking higher and or so when it does, because this is the last non-farm payroll Friday until after the next rate hike decision. So this is it for non-farm payrolls. Remember, the next one is at the beginning of October, and the next rate hike decision comes out the third week in September. So that's about it. So that wraps up our Friday. Remember, in case you needed any recap of Friday, it was red, 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 red. FOMC is really 60-40, 60% favoring that 75 basis hike, but as they made it clear, it's either going to be the 50 or 75, and they're data dependent going up until the actual date, which is September 21st. So, roughly 23 days from now. 23 days and change. We are still in negative gamma. So if we do continue selling tomorrow and overnight, we get deeper into negative gamma, which based off where we are in negative gamma, if we do get a snapback rally either tomorrow or Tuesday, that amplifies the snapback rally also. But as you return closer to 4,200, that's the gamma flip where it gets into neutral. So there's actual headwinds to rallies going on now. Now it can, because it's just a pretty substantial negative gamma, it can actually get a decent snapback rally for a while. Second item for auction is 22 Elliott waves. Are we technically in wave 3? We'll take a look at that with the cues. Stagflation coming to body slam the market. I tend to agree with that. Hey, Davey, glad to have you. Good afternoon, Amit. Davey and Amit in the house. Remember, this is pretty much wrapping up a lot of earnings this week. Nothing going on tomorrow besides you got a lot of some Japan and China stuff. But Tuesday, Best Buy, I did mention that in the weekly sector overview. You also got Big Lots. Those are the couple I'm keeping an eye on. After the close, I'll check in on Chewy and definitely HP. Both HP and HP Enterprise. Let's see. Wednesday, minor stuff with Express and Chico's Fast. And then after, not much. Thursday, it'll be interesting. You got some Campbell's and Hormel to see with the inflation aspect and consumer aspect from more so a food so that I am paying attention to that, especially with their guidance. Then you got Broadcom after the close and Lululemon. So that's about it. And then Friday is nothing for non-farm payroll Friday, again going into the long weekend. So there's about 5 or 6 things to pay attention to, major things with earnings. Where do we sit? What's the 625 level from the recent high in August to June low? We need to watch for the retest for the June low. We'll take a look at that. Let me just get to this quickly. We don't need to make this longer than it needs to be because I've already done the sector stuff. We've already recapped on Friday the head and shoulders pattern. If you want more explanation, go back to tune into that live stream. It was pretty much a lot of educational on Friday afternoon if you did miss it. The 62.5 that Amit is referring to is 38.99 for the S&P. You got to close back below that, which is also a key breakout area. Then we focus on a retest of the lows. Already, the third target of the head and shoulder takes us right down to that level anyway. So we could just be rolling. And I did talk about position rolling on Friday. And not going to repeat all that again. But that's where we're looking at. On any bounce, the thing I'm focused on is the breakdown zone. Because we did not get any bounce into the close. So really, I'm focused on the S&P 40.93 to about 41.25 as a major resistance between tonight and tomorrow. Minor, why there's a harmonic still on here, because since we didn't get a bounce, they can still be relevant for retest from the underside 40.55 and then made another areas about 40.76 to about 40.83. So those are all my levels. To the downside, pretty easy. 40.20, 39.92. Now, we do favor a move to the downside since we've triggered a pretty substantial topping pattern. Does that mean every day has to go to the downside? No. That's why I still have those rallies, because we can always come up and kiss this area goodbye and then roll over, especially with daily cycles still at the bottom. But I'm not expecting any rip your face off rallies. We're also going into September, which is historically one of the worst months for the stock market. So longer term, if you're keeping notes at home, this 38.99 on a closing basis is very key, because then probability-wise, we will be focusing on a return to the June lows. NASDAQ, key resistance is the 50 and the breakdown zone about 12,800. Minor will be 12,708, and we're sitting here right at that harmonic. To the downside, this is easy. 12,404 to 12,365, first target area. Next target area is the second target for the head and shoulders and the breakout area, this line in black, 12,135 to about 12,148. Final target, 11,906. Key level to close below, 12,070. Close below 12,070 favors a retest of the June lows. There you go. Overnight, the 4-hour rotation zone is too far away, so if you want to watch on any bounce overnight, pay attention to these 1-hour rotation zones. Dow, sounding like a broken record. Resistance, 32,365 to about 32,380, and then 32,570. Those are the levels with the hooking over 50. A major breakdown zone to kiss it goodbye would be 32.8. Not expecting that tomorrow, but we got to prep both sides. Support, 31,985 to about 31,943, and then 31,569, and then 31,557. The key closable level is 31,367. See how easy this becomes with a roadmap in place? We got a roadmap. Even on rallies, we got a roadmap. And we will cover, I already talked about the walk away trend line a bit. I didn't put it on here, and the key levels to watch, but we're so far away from any levels invalidating these head and shoulders. We can go through them once we get a rally on. Cycles are at a bottom, so we might still get the bounce at some point, whether it be Monday, Tuesday. Russell even triggering the head and shoulders. Didn't get down to 50 yet. So 1886, then 1874, and then 1840 to 1836 are the targets at downside. The key line in the sand, 1787, 80. On any rally, minor will be 1904, major will be 1916. So that's what I am focused on. Let me pull a couple of these other lines off. They are not relevant anymore. That's about it for the Russell. DAX. Look at that close. Right at the friggin' 62.5. 12,972 was the 62.5. The close comes in at 12,965. So just below it. What does that mean? Probability-wise, we should tackle 12,573 to the, these are actually the July lows for the DAX. So keep that in mind. That's why I'm paying attention to the 1 and the 4-hour rotation zones for rollover plays. Major resistance about 13,100 on the DAX, but this is definitely what rallies approach from the short side. Notes. We really need to get above this descending trend line for me to start watching for a bullish play. We are against some pretty key levels, but now it's either the breakout play above about 117.25. It's got to be nimble up to 118, then 118. We're into a clear path move really to tackle at least this prior breakdown zone in the other side. So that's why I'm paying attention to the upside. To the downside is very key at this 117.06, 117.07 level. If we break down below there, we could see some further acceleration back down to 116.06. What's interesting is we get down to this levels, we would invalidate the head and shoulders, but we could have a potential double bottom. Crude. We still have this potential double in play, and it needs still a close, which is roughly above the 200 and above this peak. It's confirmed but not yet triggered. We get a close above the peak of 95.05. We get a short-term bounce play. Other than that, if we break below about 90.50, I'm watching for a retest of the low area. Natural gas is sitting here trying to decide what to do. A bunch of people are going to trade this as a sloppy head and shoulders pattern. If we really start breaking below about 910, I'm going to be targeting 881 to 865. To the upside, not really excited. We still favor an upside bias unless we do trigger this double top. But I am patient until we get above about 966. Above 966, 1003, then major cluster area between 1021 and 1031 is the target. Gold, potential double bottom. Now, that's potential. We'll not be looking at any gold plays until above 1778.80 on a closing basis, or unless we really take it out with momentum. If we start trading below 1740, by the way, I'm just targeting the gap fill, and then we could be putting in a larger double bottom. So we have a minor potential reversal pattern that's not even confirmed yet. But if we do break down below that 1740, we got the gap fill play, which is the side I'm more leaning to with daily targets or rotation zone at the top, not rotations or daily cycles at the top. We get down and fill this gap, we might have a major bottoming pattern then. Silver, also potential double bottom, needed to trigger above 1934.5. Other than that, and we still favor lower prices to retest this 87.5. And yes, this is a bigger double bottom play, but if we start reversing up there, we'll put it on the charts. So this would just be a minor pop, but major I'm still favoring a retest of this low area to put in a bigger bottoming pattern. Copper, no, there's not as many copper traders here, but if you are a futures copper trader, we might be getting a shake and bake setup. Pay attention to that. So I'll be watching for a breakdown below 357. The early warning sign is a retest of about 363 with a close below it. Then I'll watch for the break below this, and this would be just a corrective pattern with then favoring a retest of this low area probably. Dollar index coming down, virtually hitting that first target into that rotation zone. Remember, lower probability, rotating back up. By the way, on a close above Friday's high is a continuation buy pattern from both a %B and a dip into the rotation zone and move back up. So an easy way to play this is a break above on the high intraday and then a sustained move above there. Then it would be rolled into a daily play. Targets 109.72, then 110.12 to 110.29. Stop would have to be below Friday's low. We'll take a look at the VIX tomorrow. Japanese yen real quick. Major double top pattern in play, but nowhere near triggering. We did have closed back above the 62.5, so I'm still watching for a return to 138.26 to the most recent highs back in July. So a short-term play would be above 137.55. Euro. Euro, we had this double turn into a multi-bottom, spiking up here and moving back down. I'm just watching now for the for the continuation and a retest of the low area. This is pretty much a corrective channeling pattern. This is not a properly drawn. This is more of a best fit on both sides just because of the angle of this. But if we start getting below about 99.50, watching for a retest of the lows. And if you see here, if you use those harmonics, it closed back below the 62.5, so I'm favoring a return to 99.24 to the lows back from the 23rd of August. Can't believe we're closing in on September already. Bitcoin, then we'll get to some other stuff. Bitcoin has not been able to get a weekend bounce on forever. I mean, at all. And by the way, the potential double, which never confirmed or triggers, off the table. And on any rally now, all that does is favor a return to the breakdown zone of 20,800. And with the declining rotation zone, remember, we did close below 62.5, so we're probability-wise favors a return to 18,523 to 17,565, and then a break to potential new lows. Now, really? The Qs. Why'd you even bother, Tom? The Qs does not, as this is a downward sloping. I'm doing something I've been working on for a while now. We have to do normally you come from the inside. We have to do the outside level with this horizontal flat. These are testing out pretty decent, but not as well as a traditional head and shoulders. But they do give us targets. Huh? Oh, duh. I clicked the magnet back on too soon. Boom. Let me just redo this. Make sure I got it right. I hate putting up incorrect levels. Here's your levels, options 22. You're trading right against your key support, and let me raise this because I forgot to the other day. Sorry about that. Look at this with the 50% retracement. These are beautiful targets. 302.31 to 301.85. I just target 302 roughly. 296.89, target 297, 291.47. Your key close below level is 293.71. You get a daily close below 293.71, favors a retest of the June lows. Key resistance now coming in 313.90 to 314. If we did bounce above that, your next major level isn't till about 320.50 area. And on any bounce, I'd pay attention especially to this 313.25 area. That would be the first key with the declining 4-hour rotation zone and 4-hour cycles rolling over. So those are all your levels. Spiders. Spiders have the cleaner pattern. There we go. Spiders 401.10, 395.88. I just target 396 with the 50% right in front of it. And then 390.66 right at the prior breakout level. Favoring lower prices. Now the key close below level is even beyond that target, which is 388.21. You are into a clear path move. We did fill this gap, so there's no other gaps. I'd be watching also on the spiders. And this isn't just for tomorrow, because that would be another major move. But you have this breakdown zone right here. Right below. So 401, and then I'd use an intermediate target, 398.92, so 399. Your key resistance now coming in about 409.50 and then 411.35. And your 4-hour rotation zone all the way at 412. So guess what? Not likely for 415 on the spider. Sorry about that, Tom. Sorry about that. You got way too much key resistance in the way, and we don't favor that based off many metrics here. So that's where we sit. What else? I think any other questions? Did I miss anything? We'll glance in at Tesla, but I'll do a better analysis tomorrow morning. We closed above the 62.5, so we should favor 283.77 to 279.35. The double top is still in play, but not even confirmed yet. And that's right where the 50 is. So if you wanted to play this, the larger shorting pattern, I'd actually wait for the close below the 50, which is about 278, before triggering it. And I have done a fair amount of research. When you have a key level right in front of a double, it does lower the probability-wise. We've taken a subset of that, and it does lower it until you get the close below that. I think we covered a lot of stuff today. You have a good evening too, Amit. So, what's the longer term view? And as I said in the sector overview, the longer term systems, interesting enough, the mid to longer term systems have not tipped back to bearish mode, but we have the head and shoulders in play. So we already have patterns that we can trade from the bearish side, and we're a long way from invalidating those patterns. So even on bounce plays, I have to favor the bearish view for at least the short term until we close below those key levels, and then we can tip more to the mid to longer term going into literally the worst month of the year for stocks. Does that have to hold true? No. But I wouldn't want to be backing up the truck from a bull perspective right now. We really need to get to above some key levels before we get back into bullish mode. You're welcome, Davey. Hey, thank you, Patrick. You too. I don't think we need to do anything more. If you still want more. If you still do want more, remember, the Jim Iorio Futures Ed podcast came out this afternoon and the sector overview. If you need more information going into tomorrow morning, watch them today. Watch the sector overview at least. If you need the podcast stuff, the podcast can wait. If you need to do other things until some slow times tomorrow, then you can catch up on the podcast. Either way, it is there for your viewing pleasure. With that, I will talk to everyone later. Bye for now. Oh, you want the SQQQ? Okay. Somebody wants the... Thank you for being here. I'm going to... SQQQ. This is why I can't stand trading these ultra shorts. I really can't. I'm sorry. I know people like them. I can't stand holding them because of the degradation. But if you're going to play these, you have the inverse. Now remember, because they're the ultra shorts, you get that horrible degradation. It's against you naturally. So this is not something to play long term. What did I do? Ugh. I went to the wrong level. No, I didn't. There we go. Boy. I do need a break. There we go. Here we go. Here we go. Why do I keep clicking on the wrong place? There we go. All right, your levels. 43.44 with the 50. Would not ignore that one. 45.11, 46.78. You are into a clear path move. Already closing there and closing right against that 200. So those are your key levels. I would not ignore this 45 breakdown zone. At least right there. You got a very key breakdown zone right there. This is why, if you have to play these are fine. But this is why I'd rather play the futures and micro futures versus these ultra pro shorts. You can get, and I technically did that wrong. It's an upward sloping neckline. We really have to go to this side, but it's not going to change much. There we go. You're welcome, Josh. Hey, Daniel. You're welcome. Thank you for being here. If you haven't already subscribed, please do consider subscribing. I have not seen you here a lot, and I do really appreciate everyone who tunes in. Love seeing everyone here, and it helps me remember that I don't have a life. You don't have a life. I'm doing a live stream, and I've done a recording, and I've processed the information for the podcast. I don't have a life either. There's nothing wrong with that, not having a life. I did watch the Formula One race while I was working on stuff this morning, though. That was a good Formula One race, in case there's any Formula One fans. So we all don't have a life together. Let's just celebrate that. We actually do. We're all here together. With that, I will wrap it up for now. Everyone have a great rest of their Sunday, and see everyone tomorrow morning. Bye for now.